Dan McCoy, thank you for joining me today. Dan, you lead our Heartland region of HVS, and I'm happy to be speaking to you today about what is happening in your part of the world. Maybe start off with just telling us what is the Heartland? What does that mean to HVS and to you, and what's the region that you oversee?
Yeah, the Heartland is a wide area in the middle of the country within HVS. It means offices and locations with associates in Nashville, St. Louis, Omaha, and Minneapolis. Kind of spreads in an L shape across Tennessee up through Missouri and Kansas and Nebraska into Iowa and Minnesota.
So what are you seeing in that part of the country right now? Are you past the bottom point of the cycle? Where are you all at?
I mean, it's a wide area to cover, so there's definitely a lot of variance from market to market. But I think on the whole, we're definitely through the worst of things and past the bottom of the cycle. Um, there's definitely a sense that the worst days are behind us, and we're on the path to recovery throughout the region at this point.
Okay. Watching the news this morning, the latest is that we're supposed to have 400 million doses of the vaccine by May, and everybody have access to begin a vaccination by July, meaning everybody who wants one in the U.S. But perhaps a majority of the vaccines being available in May. If all of that holds true, how quickly do you expect the pace of recovery to be in the Heartland?
I think it'll be relatively strong. I think, as I said, there's a wide variance across some of our markets, and so we've seen some markets such as Minneapolis or Kansas City that really have experienced a lot of supply growth leading into the pandemic and continuing over the course of 2020. And in a sense, those markets will have a little bit deeper of a hole to dig out of, I think. So it's not necessarily that the pace will be slower. It's just that there's more ground to regain. And on the opposite end, a lot of the secondary, tertiary markets throughout this wide swath of the country were not impacted nearly to the degree that the urban markets were. And so, I think as highway travel really picks up this summer, those markets could, the smaller drive-to and drive-through markets could really experience a relatively strong summer and latter half of the year.
Okay, great. I know you prepared some observations for us. So related to market conditions for the last 12 months, where we're currently at and what you see going forward. Would you be able to take us through some of those?
Yeah, definitely. So what I did was I put together some notes on St. Louis, which is where I'm based, as kind of a base case or an example of kind of what we're seeing in an urban market in our region, and how we view where things are and what the outlook is. I'll try to give some comparison to some of the other markets, but really the focus will be on St. Louis. So, looking at each market and evaluating it, we really look at where things were prior to the pandemic. So, the end of 2019, the first couple months of 2020, how are things looking? And that gives us a good indication as a basis point for, what the impact was, how to evaluate what the impact was during the downturn, and also what the trajectory is for recovery. So looking at St. Louis in 2019, RevPAR was at an all-time high. We were experiencing supply growth of new hotels opening, but it was relatively sustainable, and there was not an oversupply situation that was having a negative impact on hotel performance. In St. Louis, similar to many of the other markets in the Heartland, there's a minimal reliance on international travel. There's definitely Fortune 500 companies here and throughout the Heartland that are bringing in travelers from around the world, but it's not a major segment that we were relying on. St. Louis has been a modestly priced convention market, so it was attracted more Smurf type convention demand. We had a lot of sports events and religious groups and associations. In terms of corporate or commercial convention demand, it was more multi-level marketing companies as opposed to a major corporate or high profile professional association. And so that held us back a little bit before the pandemic in terms of pricing and the production of the convention center for the market as a whole. But I guess in terms of the last 12 months and looking forward, it may have been a blessing in disguise. We have a pretty diverse mix of commercial demand sources throughout a variety of sectors, from healthcare, financial services, government, both state and federal, providing strong commercial demand. And then really in St. Louis, as is similar to other major metros in the Heartland region, there's a strong regional leisure demand where the population from a, let's say, 5-hour to 8-hour drive may come to the big city to spend some time each summer. And so in St. Louis, that's always been a source of strength for the hotel market. And in 2018, 19, 20, we had some new attractions open up, including a major redevelopment of the Gateway Arch and a new aquarium that opened in 2020, and a new Ferris wheel that also actually opened in 2019, the Ferris wheel, and late 2019 for the aquarium. So when we look at St. Louis pre-pandemic, it was kind of middle of the road for a top 25 market in the country. Definitely not top of the heap, but not at the bottom either. And as a market, just in terms of transactions and investment, it was really a market that investors looking for yield ended up looking to, where investors were able to or looking to achieve returns in St. Louis and similar kind of second tier major markets that they weren't able to achieve in the strongest gateway markets or coastal cities. So when we look at really the last 12 months and what happened as the pandemic hit and where we ended up in 2020, RevPAR was cut in half in St. Louis, which is pretty much on par with the overall average for top 25 markets in the U.S. There was some continuing supply growth, but it was really the completion of projects that were already under construction. And over the past 12 months, similar to other markets, there's very limited demand generated by attractions and sporting events and conventions and kind of major festivals. So it really took the legs out from the urban, particularly the urban St. Louis market. On the plus side, we did see that several major development projects continue to move forward in St. Louis. There's a new new multi-billion-dollar development for the campus of the National Geospatial Association, which is our agency, National Geospatial Intelligence Agency, which is a government agency based in St. Louis. And then we've also had a new Major League Soccer team that is moving forward with development of their stadium. That construction started despite the pandemic last year. On the investment side, there really was no substantial transaction activity in St. Louis, which is not necessarily a negative thing in that, we didn't see a flood of distressed assets come to market. And so there hasn't been, to this point, a negative impact on market pricing. Although values are down from where they were in 2019, there hasn't been transactions to kind of point to how the market has been affected. As far as the outlook going forward, because we have the diverse demand base here and we have had relatively sustainable supply growth, and we had strong RevPAR in 2019, the outlook for recovery is not immediate, but relatively positive, I think, compared to major metros across the U.S. as a whole, and even some other metros in the Heartland region that were more impacted by supply growth. So when you look to a RevPAR recovery in St. Louis, we're likely to see the market get back to 2019 levels by 2023, and that will be supported by those new attractions that opened, immediately before the pandemic, really ramping up and drawing tourists and visitors back to the market in 2021 through 2023, and we expect a recovery in the convention market to really start in the latter half of 2021, but see really full years of strong convention activity in 2022 and 2023. Another one of those projects that has continued to move forward during the pandemic is what's called the AC Next Gen, which is the renovation of the America Center Convention Center, which received full approval and funding in 2020 and is now in the design and planning stage and is expected to be completed in 2023, which should really provide a boost to the overall market as it's hitting its recovery stride in 2023 into 2024. And we'll see really a strong and healthy rebound in commercial demand as employment levels have not been too severely impacted during the pandemic, and most major employers are healthy. And we'll see that continuing development with the NGA campus and also a major development downtown with Square, the mobile payments company, moving into a new headquarters or a new regional headquarters in downtown St. Louis. So all in all, St. Louis is likely to recover a little more quickly than the major metros across the U.S. as a whole, and probably a little quicker than Kansas City and Minneapolis, given the supply challenges in those markets. And so from an investment perspective, we expect that it'll remain an attractive destination for capital looking for a stronger yield with maybe a little less recovery risk than some other markets out there.
You put together some forecast numbers for the market. Why don't you walk us through those?
Yeah. So here you can see how severely the market was impacted in 2020. Like I said, down about 50% in RevPAR. But in 2021 through 2023, we're projecting a pretty healthy recovery. You know, strong percentage growth in those first couple of years to really help dig us out of a hole and get back to 2023 RevPAR numbers by, or get back to 2019 RevPAR numbers by 2023. And really, like you mentioned and I mentioned, that really the leisure demand coming back first and strongest in 2021, and then corporate commercial demand picking up maybe a little bit later in 2021, but coming back pretty strongly in 2022, and then the group market also strengthening over time through the latter half of 2021 into 2022, and really hitting its stride in 2023. And then, you know, not included in these projections, 2024 and beyond, I think looks pretty strong with the renovation and expansion of the convention center.
Dan, that's been very insightful. I appreciate your time today to walk us through what's happening in your part of the world in the Heartland, putting together these forecasts and giving us all that great insight. It's been fantastic information. Thank you for your time.
Yeah, you're welcome. And like I said, we focused on St. Louis here, but you know, we've taken a similar approach to develop outlooks for the other markets across the Heartland. So, you know, that we have the information and the outlook, and, you know, would be happy to share it with our clients and contacts.
Great. Thanks so much.
Thanks, Rod.